Hey guys, David Huffaker here with another week of your update on what's going on in the industry. So a lot of questions going on right now around interest rates, and if you've watched the stock market in January, you'll see we're expecting the worst month in the stock market since March of 2020, right after COVID started. And so just a lot of stuff going on out there, right? And so I know a lot of people have had questions about interest rates and around the market. We've all said, are we in a bubble? I think most of us agree that we have not been in a bubble, and a lot of trends that are out there to kind of support that. What I want you to think about as people are starting to ask you this question is, are you using real data or are you going off of feelings? Because it's easy for us to get caught up in the headlines and the conversations. Again, remember, the Fed raising their interest rate is not a direct relation to mortgage interest rates, although over time we should continue to see mortgage interest rates continue to climb as well. So I don't think it'd be crazy by the end of 2022 to see mortgage rates in the mid fives, high fives, maybe low sixes. We'll see how that plays out. But a lot of things adding to it. But guys, please understand that rising interest rates don't necessarily mean a drastic change in what's going on. We know that there's a very unhealthy balance of supply and demand, and that's really what you have to bring it back to, is the economy of supply and demand. Go back to 101, right? This will always hold true throughout your real estate career. When supply is high and demand is low, prices go down. When demand is high and supply is low, prices go up. And so as interest rates rise, we may see those prices level off. There's not a whole lot of indication on anything that would drive prices backwards. And so I want to show you, this is what we use locally in Tennessee. Most MLSs probably have this information. I'm going to share my screen with you real quick so that you can see a little bit about what we're talking about. So just for a moment, if I go over to, this is InfoSpark or the data. And so I've got pulled up here at the top, the entire MLS. I've got 37122, which is the Mount Juliet zip code. I've got Davidson County, Tennessee. I've got Wilson County, Tennessee. And this is just on single family properties. And so what I want to do is look at the trend lines, look at where we've been, kind of look at the direction. So this is data all the way through December. Right now, we're looking at it over a 5-year scale. I like to look at it over a 3-year scale and kind of move back and forth. That gives me some indications on where things are. So this one kind of talks about the average and median sales price. So I look at the average sales price, right? In Wilson County is 455,000. Davidson County is about 540,000. Entire MLS 442. So again, what I'm looking for is just the general increase, right? That we've all experienced and seen. This going all the way back to 2018. So you can see in the last 3 to 4 years, quite a jump in the prices in the area. Now, what does it have to do with the market? Just shows kind of the upward trend. We haven't seen prices go down in quite some time. This one I think is interesting, right? If you look at the number of new listings that are on the market, and you can kind of see, again, the orange line being our entire MLS. Then even down here at the bottom, if I want to look at all of Wilson County, again, just very few new listings. These are single family homes. As of December 2021, there were 1,779 new listings hitting the market. And that seems, in my head, that seems high for that time of year. But again, if I look at the trend lines, right, if I'm going off of how I feel, that seems high. But if I look at the trend lines, that actually is the lowest number of new listings in a long time. And so we kind of expect that for December. In contrast, December of 2020, there were 2,873 new listings put on the market, right? And so again, fast forward, 1,779 this December versus 2,873 last December. So it's a huge drop in the number of new listings hitting the market. Okay, right, that gives me a little bit more data. Looking at the total number of homes for sale, right? Again, we kind of see that number like sloping down. I can see the negatives here. This is going to be year over year. And so again, the number of homes for sale dropping. So again, supply, right? New listings, homes for sale, excuse me, that would be the supply going down. Now, if I want to look at pending sales, kind of look at it and go like, okay, well, again, pending sales tend to be up, right? 1,888 in Mount Juliet, for instance, versus December of last year, 1,649. So again, a growth in the number of homes pending. So again, I kind of go like, all right, talk to me about demand, seeing this upward trajectory on pending sales. Again, kind of a flat year over year, but slightly upward trajectory on closed sales, right? And so I go like, okay, my first two, new listings and homes for sale. So supply low, right, down for single family homes, pending sales, and closed sales trending up, right? So again, supply is new home sales and homes for sale, demand, pending sales, and closed sales going up. So again, Supply is very much in check, really too low, right? That's what's driving the prices up, and which is really unsustainable, guys. We do not want to see that type of growth year over year in home prices. A lot of that's to do with the appreciation, but inflation, a lot of things adding in there that's just not healthy for us long term. And so when I look at days on the market, again, kind of clicking over to the median days on market, you can see really low back in 2018, 2019. Again, you kind of see where COVID happened, right, as we're kind of going up. But again, just keep in mind, like we're talking about median days from pending to, or excuse me, from hitting the market to closing. If I look at the averages, again, still within about a 69, 79, 80 day range, right? And so you figure it takes about 30 days for it to close on average, right? So you got to kind of put that in perspective. Month supply, again, saw it kind of peak up here, still not unhealthy, right? 4 to 5 months supply, which is typically what we're looking for. And remember, that was right in COVID, right? When everybody was quarantined right there at the beginning of 2020. And so again, now, but look at it now, right, guys, we're still in December. As of December, we were at a 3-month supply, 2.8 month supply in Davidson County, 2.8 month supply overall. So when we look at these things and you can go through, and what I really want to encourage you to do is to research your data so that you are having factual conversations and being the local professional. Again, to me, the amateurs react off of the emotion and the headlines, and they're just grabbing sound bites. Now, that doesn't really tell us a whole lot about what's coming forward, other than as long as we're watching the supply and demand of the market, really the number of homes available and how many months supply is available. Meaning, if we sold every home on the market, how many weeks would it take for us to have no homes for sale? Again, that's still really, really weighted in the seller's favor at the moment. So very low supply, extreme demand, especially here in Middle Tennessee. So other things that you can look for demand is job growth, companies moving in, wage growth, things like that, which is really strong for us here in Middle Tennessee. And of course, you can research that in your market to just get some perspective on things going forward. So when we look up and go, okay, well, if interest rates go up, how does that impact it, right? So it probably has a bigger impact on your first-time home buyer, which has been priced out of the market for a little while. And so your move-up buyers and things like that, again, money's going to get a little bit more expensive. So it would probably make more sense to do something now or this summer than it is going to be do this fall, next winter, next spring, things like that. Again, not expecting home prices to trend backwards at all. Maybe seeing the prices level out, but your interest rates going up, meaning it costs more to get that same dollar. Again, probably not going to have a huge impact. If you think about the average percentage of income that people are putting in that's allocated towards a mortgage or buying a house, guys, it is historically low, right? If you think about historically pre-1990s, pre-2000s, that hovered around 35 to 40% of someone's overall income went to pay for their housing. Currently, that number is closer to like 14, 15%, maybe 19% in some markets. So you look at it and you go like, man, your house is really a smaller percentage of what it has been historically. So as interest rates trend up, people are just going to find different ways to spend that money, right? They're not going to not have shelter. And so you just want to be smart about it. Think about the market, think about being strategic about how you win. And most of all, just make sure that you're educated, right? People are trusting you as the professional to make sure that you can have an eloquent conversation about interest rates, about supply and demand, and really making sure we bring it back to that, to the basic economics of it, so that we can be the local economist of choice in our neighborhoods. Guys, I hope you're having a great week. Please reach out to me, your team leaders, or your ALC members if we could be of service to you. Talk to you soon.